Alright guys, good afternoon, good evening. Let's wait another minute for some latecomers. There's always people who like to be fashionably late. How's everyone doing today? You guys could chat over here. I take chats as they come. Alright, so let's begin. So this presentation is going to be recorded. It should last about 15-20 minutes, and then if you guys have any questions, it could go on to who knows how long. Today we're going to be going over something that you may think redundant, but I'm going to go below the surface on this one and really go deep into how these mistakes really lead to continuous bad trades. So let's introduce 5 mistakes traders make. Now it's not going to be the normal 5 mistakes that you've probably seen all over the place. We're a little bit different in terms of teaching people and educating people, and it's very different. So if you guys have any questions, and if you guys don't understand any terminology that I'm putting out there, please don't be afraid to shoot it out there, not just for yourself, but for everyone else who may not understand as well. So let's move forward. So let's go over the list of the 5 mistakes we're going to go over as bullets in the beginning, and then we'll go over them in depth one by one. So trading based off of a monetary goal. Now many of you are unaware of this type of mistake or impediment that could lead you to making a lot of bad trades. But to have a monetary goal necessarily isn't something important or that you need. It's actually what I call myself personally trader suicide. And we'll go deeper into that when we move forward. The next one is profit and loss trading, which kind of connects to the previous one. But I do have a system. We have 2 systems, a basic one and a more complex one later on in our education. But what I'll introduce you with is something we go over, which is called A plus B equals C. And you'll see how we'll implement that. Next is something that you may have heard is redundant, but many people don't do it. You know, it's one of those things that people always say is important, but you leave it out, right? In all facets of our life. So not analyzing past trades directly after the trade is complete could be very detrimental to you. Okay, because number one, I'm not sure how many of you even journalize your trades. So if you do review your trades, you're gonna miss out on a lot of things at the end of the day if you wait till then. You're gonna forget exactly why you got into it. What was the action tick by tick happening? Okay, so when you go back to it later on, 4 hours, 6 hours later, you could definitely forget a lot of the many nuances that really reflect how the market is reacting and how you reacted to the market. Okay, is everyone following so far? Can I get one person with an amen or a yes? Anybody? There you go. Okay, so the 4th one is not journalizing trades with visuals. Okay, now not journalizing trades is a no-no to begin with. Okay, but this should be something that's common sense. So we have to go a step further, and that's not journalizing trades with visuals. Okay, and what I mean by that is you could look at you could record the time, the date, the symbol, the side, how much you made, net, gross, and comment reflecting on the trade. Even that is not enough, because in all realness, you need to see what was going on. And how many of you, I know there's a lot in the chat room, so many of you probably thought, oh man, it's a bad day. I wish I was able to know how I implemented my trades on other days just like this. Or how did I play out trades in a market condition such as this. Would anyone agree with that? Has everyone had that? I've had that. And it still happens. So visually, you could just use snipping tool, right, in Windows or whatever you want, and then just do your whole screen, mark where you want, and then that'll help. And you know what? If any of you could remind me at the end as a question, I'll even give you some examples. I have an example sheet of how to do it, okay? So lastly, no proof to switch to a live account. Now, many people, they think they're very anxious, okay? Even after a week of trading, if they see that on a simulator they did well or on paper they did well, they think it's enough to be able to move to a live account. And this could definitely lead to a devastating consequence such as losing money. And all of us here don't want to lose money, that's for sure. So what we usually do, actually we'll go in depth with that. So let's leave it at that and let's move forward. So the first one is trading based off of a monetary goal. Now, I'm going to go over some commentary and then I'm going to go over in depth. And if you guys have questions, by all means, I like to freestyle this, all right? So one of the biggest misconceptions with becoming a trader is developing a monetary goal. Most of us think that this is a normal route to take since it is something we feel is tangible to us. How much harm can actually come from setting a daily profit goal? And the answer is actually a lot, obviously. So let me give you an example here. How many of you have a daily goal? Any of you can answer that? Be honest. It'll help a lot. There you go. So we have a $300 goal, $200 goal. There you go. Perfect. Okay. Now let me show you how this is trader suicide. Okay. So, and it's not your fault, guys. A lot of education teach this misconception, and it's very, very bad. I think it's a bad taste in everybody's habitual doings when they're trading the stock market. So what could happen here is, let's say for instance your max daily goal is $300, right? So we have a max daily goal every day of $300. Now let's say you're up, and please tell me how many people have been in this situation. You're up $200 right now, right? You're only $100 away from your goal. So now you get into a position and you're up $50 unrealized. Everyone following so far? Okay. So now you go to yourself, oh man, I'm only $50 away. Right? Everyone's starting to see what's happening. So now you're going to try to push that stock to go up only, let's say you have 1,000 shares, right? Oh man, I only need 5 more cents. 5 more cents, 5 measly cents is all I need, and I'll be able to catch my goal. And all of a sudden, what happens to the market and the stock? The stock starts to go sideways, look like it's ready to push up and go your way, and then drop down a little bit. Now you're going to yourself, okay, now I'm unrealized, I'm down $30. So naturally, I'm only up $170. Okay, realized. So now you're going to yourself, oh no, hell no. I was up $200. No way am I going back to $170. How many people so far have been in this situation? There you go. So thank you for being honest. It happened to a lot of people. So now you go to yourself, I'm going to hold it a little bit more. I think it's going to go up. And what you're really doing is you're casually letting yourself go, digging yourself deeper into a hole. And then at the end of the day, you get out. Now you're less from where you even started. You're at 150, let's say. And now something could happen. You could gain an impediment, as what we call it. And one of the impediments you could get is desperation or recklessness. Okay? Now recklessness could definitely be a bad impediment, especially after losing catalyst. Okay? We call a losing trade that you've made through an impediment a catalyst. Okay? Now, I don't want to divert too far away. So anyways, now you go to yourself, I need to get into another trade and at least get back to 200. Now you're fighting to get back to where you were from the beginning. So you have to fight through your commissions and through the stock market. Now, this is what happens to many, many traders, and this is why consistency is not in your portfolio. Does everyone see how this monetary goal could actually become a misconception so far? Does anyone have any questions? Anyone want to refute my my comment? Okay, so let me dig a little deeper. So, and this is the reason why. To put a monetary goal is trader suicide for this reason. You do not control how much you make out of the market. Okay? You do not control when the market is where the market is going to go and how much the market is going to give you. That is your misconception, is that you are forcing upon the market what you want to make, what you want to perceive. And this is a big misconception, guys. Okay, what you need to do is you need to react with the market. Okay, not have the market react to you. That's never going to happen. How many people think the market's going to react to your perception? No way. The market could change at any moment, no matter what you see. So by trading with a daily goal, okay, by trading with a daily goal, you're already putting yourself in danger. All right, you need to make whatever the market is willing to give you. Okay, whatever the market opportunity is out there, that's what you could take for that day. Sometimes the market will offer you great opportunities all day, and sometimes the market will offer you no opportunities all day. Okay, so with us, we use something called the rifle charts, and in level 1, I don't want this to sound like a sales pitch, so I'm just going to go over it briefly. We basically learn how to be able to dissect through multiple time frames whether there are impending moves, whether the market conditions are fluid or they're choppy. And by doing that, we could eliminate a lot of noise. Okay? So by doing that, you could choose wisely or be a picky chooser on which setups you want to adhere to. Okay, and obviously it goes a lot deeper than that. Okay, anybody have any questions about this section right here, the first bullet? All right. Thank you, dude. Let's go to the next one, guys. All right, next one. Profit and loss trading. Oh, you guys are going to like this. So, this may seem redundant to the previous point, but it's just as important. Many traders have the tendency to look at their realized and unrealized profit and losses more than watching the charts that enables them to take monetary profits in the first place. Right, guys? Why do you get into a trade? Because what the chart shows you. So then you got to ask yourself, why do you go and you start staring at your P&L, your unrealized P&L? Do not trade off your P&L. So, by watching your P&L during a position, you pose a great threat to the performance, since you now will focus your trading based on the P&L and not on what creates the byproduct, money. All right? So, I'm going to give you a simple formula here, guys, to test on your own. If you guys don't believe me, you guys don't believe our strategies and our philosophies and principles don't work, I dare you to test this out. Okay? Now, A plus B equals C. So whatever strategy you use, you could implement this. Now here's the test. The test is to not to look at your P&L for the whole day until the end of the day. There is no reason to look at your P&L, guys. Okay? All you should be looking at is what makes you money. And what makes you money is the chart. So, how many people focus on C, which is the byproduct, the money? All right? Many people do. All right? And that's the problem. The problem is everyone's thinking about the byproduct. Oh, the money. Oh, the money. Oh, the money. The money does not make you money. Okay? The byproduct does not make you money. You know what makes you money? The charts. Okay? So by focusing on A plus B, the byproduct itself will turn out great most of the time. Okay? Does that make sense to everyone? Do not focus on the byproduct. The byproduct is not in your control. What is in your control is the formula to develop the byproduct. All right. Now, you could eliminate a lot of impediments. And what impediments are basically triggers or catalysts that trigger your emotions to react in unnecessary ways, as we call it. Okay? And that's what you don't want. You don't want to focus on C, because then you'll start causing impediments and mistakes. All right? So here's how I want you to break it down. A equals your entry and B equals your exit. Okay? If you focus on your entry and then you focus on your exit, and you have a guided system for your entry and for your exit, and you're confident with it, then guess what C should be? I think everyone should be able to understand to answer this one. Okay, so test it out. And you guys could email me if you guys want, because I would love to see your responses. All right, I get very great responses from my students. Support at Alpha 7 Trading. Email me. Tell me how it's going. If you need any help, I'm more than happy to help a little bit. All right. Anybody have any questions, or I can move forward? All right. Looks like some people are chatting. Let's give it a sec, guys, while I take a sip of my coffee. Yeah, I made it clear. Thank you. Okay, so I'm going to give you guys some freebies here. So we use something called the rifle charts, and I'll give you guys the YouTube to our videos. And just through our YouTube videos, you could get a couple hints of how our rifle charts are set up. Okay, it's all free. Just give me one sec, guys, and post this for you. Next time I'll post it right away. Most of it is when we are trading on an intraday, in an intraday time frame, John, it's mostly technical. As you go deeper into a multi-day trade, a portfolio trade, overnight trade, that's when more fundamentals get used as you want to hold and hold your position longer. So the longer you hold the position, the more fundamentals you need to use. The less you hold the position, the more technicals you have to use. Great question, John. So Harry, so we use something called Bollinger Bands, moving averages, and stochastics. Now, we call these bumpers, and what bumpers are reaction levels. We don't know whether they're going to go up, they're going to go down, but we know that when it reaches that area, it's going to react somewhat one way or the other. So what we do is we use those as nominal targets. So as we go long and the 15 minutes on top of it, when it reaches the 15 MA, that's when I'm going to partial out and shave 100 shares and go to the 20 MA. Once it reaches the 20 MA, I'm going to partial out another 100 shares. Great question, Harry. Excuse me. We use the 1, 5, 15, 60 daily, weekly, and monthly. But for intraday, we use only the 1, 5, 15, and hourly. And sometimes the daily if we want to find some sleeping giants. And a sleeping giant is a setup that's forming on a wider time frame that aligns with the shorter time frame setups. Almost like aligning the planets. You wait for everything to be in your favor. That's how we trade. We don't use just the 1 or 5. We trade the futures, equities, forex, and options. Our strategies are based on laws of linearity, which means that any of our setups work on the 1 minute, just as they work on the 5, 15, 60, and all other types of securities where you could plot price action on. Start using the 1, 5, 15, and 60. 1 minute should be your entry and your exit tool in the beginning until it expands and it reaches the 5 minute. Then you start using the 5 minute. Does that make sense, Harry? Right? It's a domino effect. You got to go from the smallest time frame to the wider time frames. And as you go to the wider time frames, you minimize your shares because the exposure is longer. Don't use the 2 minute. 1, 5, 15, 60. You'll see how you'll have a clearer picture. All right, let's move on. So, not implementing post-analysis. Another misconception most traders have is that trading provides you with excellent profits with very little work effort. Most people who want to become traders have this perception that they can trade until the market closes and then party hard. However, this is hardly the case. In order to be successful, one must implement post-analysis right after each trade and even later on in order to enhance your trading performance as well as learn from mistakes instantly in order to improve your ability to divert when the same situations arise. So, how could implementing post-analysis right away help? And I'm gonna cut off from here for a second, and I'm gonna share something else. I'm gonna share my screen, and I'm gonna open up a beta version of a journal that I have. You guys see my screen? Okay. So as you can see, we have here the date, time, symbol, side, shares. I don't care about partials, I care about the end result. Net, gross, and then we have something called a key indicator that I created and comments. So now after each trade, I have a number. And as you can see, what I do is if I click it, all right, it'll open up and it'll show me the trade that I've taken. All right, so let's open up this one. So here you could see we got into a reversal, and it was a 1 minute market structure high. It's one of our first setups that you learn in level 2. It's a reversal pattern, and we took it from here to the 15, and that was about it. After that, it kind of dissipated, as you could see. All right, but how much easier is it to understand why you got into it by looking at it just as if you were looking at it when the market was happening, right? I have the SPY correlated with this, so I can know exactly how the SPY was reacting. I could see how the wider time frames were reacting, instead of just seeing this 1 minute market structure low as my comment, right? So by using visuals, am I even up to that part? Hang on, guys. Excuse me. Okay, so by not implementing post-analysis, okay, not even right after, this isn't about right after, I kind of skipped ahead. So you may see a lot of people showing pictures of them on the beach, after trading, whatever it may be. But in the real world, guys, most of your profits are going to happen at evening research, okay? When you actually look at research at the end of the day, okay, and you look for setups for the next day, this is what we call food, okay? So by researching the day before at nighttime, you're basically providing food for the next day, so that way you never starve. And believe it or not, it's a great feeling because when you look for setups, okay, and they actually occur the next day, you have so much more conviction and confidence in the setups. It's almost like taking candy from a baby. You can't believe that it's working out, and you know the probability of it working out is going to be great. Okay, does everyone understand that? So doing most of your research on evening is going to be very, very beneficial for you. I guarantee it. Just a half hour, go through your watch list, go through StockTwits, go through FinViz, major news, okay? Go to Yahoo earnings, look at the earnings after market close from the previous day, and look at before market open for the next day. Look at economic news, put all that together, and you'll be able to know when you should be trading, when you shouldn't be trading, what you should be trading, what you shouldn't be trading, looking for setups the day before. This really helps plan out your next day much smoother. So, not journalizing trades with visuals. I was just going over that. I apologize for mixing them up. So journalizing your trades is an integral part of being a successful trader. Not only should you journalize your trades, but take the screenshots of each trade to be able to revisualize certain scenarios with certain setups. This helps tremendously with increasing your trading performance and consistency. Remember, most importantly, be honest when entering into your journal. Do not say, oh, that one messed up. Oh, I didn't get a good fill on this one. I don't want to do that. Oh, I stepped away. I had the microwave or my cat needed food. No excuses. Whatever it was, if there was some reason that you had an outlier, which is something out of the ordinary happening to you, just comment on it, okay? It's always good to be able to know what happened in the past truthfully, because if you're not truthful to yourself, you're never going to be able to move forward, all right? You're always going to be taking two steps back to take one step forward, and that's not good. So one thing you could use is traderview.com. Anybody know about this platform? Traderview.com. How far from entry do you have your stop loss? So that all depends on the setup that we are using at the moment, John. We have a couple different setups. Different setups provide different stops. Sorry, it has to be vague, but we have setups that are very they go very deep, so I wouldn't be able to go through it in just one webinar. So TraderView, it's free. Okay, it's very easy. You could use a Thinkorswim simulator. You could be using your NinjaTrader. It uses almost anything. Okay, so whatever simulator you're using, you could be able to automatically import your trades and be able to see great details. Okay, or you could use the Excel sheet like I had, and if you guys want it, just email me. Once again, support at alpha7trading.com. I'll be more than happy to provide you with the beginning, so that way you could just build upon it. All right, and so by doing the visuals, it'll really help. And I'll give an example. For those of you who are following the market, a lot of you are starting to recognize or have recognized that the market has changed. It's become slow, choppy, no follow through, light on volatility, light on volume. There's no multiple breakouts. All right, so it's a very dead market, and you could look at the daily. If you see the daily, we're in a very dead channel on the daily. So you can't expect to have very good fluidness. And sometimes it happens to a lot of people that your strategy's working out, you're making great money on 1 month, and then the next month you can't trade your way out of a paper bag. How many people has that happened to? And then you go crazy because you think it's you. You changed the way you trade. But in reality, it's not you who changed, it's the market that changed. And a lot of people have a tough time to believe that. And the way to believe that is to be able to have visuals and go in the past. And I could go through over 700 trades at different times and to be able to analyze what worked and what didn't work and sift through and be able to tighten my requirements. Does everyone see how this could be beneficial? Anyone have any questions on that? I guarantee, guys, this subconsciously, subliminally, it's gonna help you out regardless. And when you're feeling down after a bad day, it's always great to go back and see your previous trades, and that way you could see what you did wrong, agree with what you did wrong, and take it as a lesson and be able to move forward, okay? Now lastly, no proof to switch to a live account. So most traders are set on going live at a very premature stage. A lot of money can be saved by taking your time improving your performance on a simulator before going live. Develop a line in the sand in which you are comfortable enough with your performance on a simulator in order to make the move to go live. Example, make $4,000 a month on 500 shares for 3 months. Why? Okay. Anybody know why? Anybody disagree with this? Anybody agree with it? Any comments before I move forward? Okay, so the way we teach it in our education, guys, is our students and our traders, we strive for 75% consistency. Okay? So in the beginning, you have to go with small shares, and for a whole month, you have to have 75% consistency before you could even raise your shares, your share lot size. Now, you don't have to be exactly 75%. You could be near the range of 68 to 75. Even 65 is good. Okay, but this is what our students go for, and it's a reality. All right, let me see. Do I have any people from my education in here? I don't think so. No, nobody in here. Bob. Yes, but you don't come in. You come into the chat room? Not much. Well, Katie was here. All right, so anyways, so what you need to do is develop something that you're comfortable with. Now, making $4,000 on 500 shares in 1 month isn't enough proof. You could have just been lucky, okay? What you need to do is you need to do it for 3 months straight. And if that's not comfortable for you, do it for 4 months straight. What are you waiting for? What are you in rush for to lose money? No. Take your time, feel confident, and go on small lots when you're doing a simulator, because if you go on big lots with fake money and then you switch to a live account, you're not going to be used to the share lot sizes you're doing. Well, that's why you need to, that's a great question, Andrea. That's why you need to build some sort of buffer zone. Now, $4,000 on 500 shares, if you were able to make that for 3 months straight, even with all that spread that you have, okay, you would still be able to come out with $2,000. Let's say you had a 50-cent spread kill, right? You'd still be making $2,000 out of that. It gives you enough comfortable ability to know that even if you did transition, you would still be able to be positive. Does that make sense, Andrea? Right? So you gave yourself a buffer zone. All right, if I don't make 4,000, even if I do 2,000, okay, that's still great. I'm still in the green, and I'm still consistent to build upon that. All right. So make it big, make it realistic. You could even use this. Okay. If you could do that for 3 months straight, then you could go and you can transition. Now, for most of you, I would probably do 300 shares. Okay. Do 300 shares and do 2,500 as the goal. All right, that way you could trade a lot of price stocks. Your losses won't kill you, and you'll be able to be consistent and build upon it. Any questions on this? Forget about the percentage gain. Okay? That's not, don't start going in with ratios, 3-to-1s, 1-to-1s. Just trade the market, and if you trade profitably with your perception, it's good enough. To micromanage for day trading, it's more or less going to kill you. You just need to make sure that you can make money off your strategy. If it's consistent enough. If you can't do it for 3 months straight, then you have an issue. If you're doing it for 3 months straight, then I guarantee your percentage is doing fine. Don't forget, most of our students aren't going live until they reach 65% consistency. At that point, their percentage gains would be pretty big. And even if not, it's a start. You got to start somewhere, John. You start small, you build up. 75% consistency, boom, increase it. Next month, 75% consistency, boom, increase it. Remember, for anyone, trading isn't an easy task to make money in trading. All right, we have a saying here. How many of you believe that this is a zero-sum game? Does everyone know what a zero-sum game? Right? One wins, the other one loses. Right? How many people agree that when one wins, the other one loses? It's a tit for tat. Anybody else agree with that? Or anybody else have different a different? No, Harry, why no? You're right. It's actually a minus sum game. Okay? And with a minus sum game means that the deviation of winners is actually a lot less than the losers. So there's a lot more losers than there are winners. And that's the reality of stock trading, guys. It's not a zero sum game, it's a minus sum game. All right? So it's a lot harder than you expect. So to be able to just keep consistency and be in the green live, it's a start. And what I like to tell a lot of my students, okay, is that I can't prove to you success. Okay, success is in the perception of everyone else, of the eye of the beholder, I could say, which is cliche. But what I like to show and what I can prove is progress. Okay, that is tangible. Progress is tangible, and that's what you guys should be striving for. Success never ends, and that's not something you should really be using. It's not tangible. However, I guarantee with Alpha 7, okay, I could definitely show you progress. So, any questions, guys? You could even come into the chat room. There's a free trial, and you could test it out yourself, guys. You'll see me calling out live trades. What's up, John? You raised a hand? Duran Yoetz. We trade we trade futures, forex, equities, and options, but most of our traders and students are trading equities. That's the first place they start is equities. Then they go on to futures, options, and then forex. Stocks and equities, same thing. You know, I don't do that. You could just come in and check it out yourself. You don't even have to look at my setups. All right, guys. Trust me. There's a lot of great students in my room that are gonna call out trades that you wouldn't believe. So just come into the room and you won't even see it from me. You'll see it from everybody else. You could prove me wrong. Today I could tell you what I did. I was pretty slow today because I was on YouTube Live. 5 winning trades, 1 loss. I only had 1 loss, which was Apple, minus $28. Then I had the futures, 125, Dow 29, and Hum was 62. And this is on 300 shares. I make it realistic for everybody else who is in the room. You have to use, you see this bit.ly right here? I'm gonna put it in here. Yeah, but there's no, yeah, you have to log in. John, I do paper because I'm only helping people out. It's more of an education than it is for anything else. If I was going to trade, I wouldn't be able to talk to you guys and pamper you guys. So it's a little bit different than other chat rooms that you've seen. But there's a lot of people or a lot of traders in my room that are taking them live. I can't say anything low. You could come into the room and check it out. It's either you want education or you want to just learn off somebody and take their trades for the rest of your life. I'm an education company. I believe in education. Yeah, we call out $20 stocks, not really $10 stocks. Most of our stuff is based on volatility and movement, price volatility. So we're looking for big moves, and usually $10 stocks won't provide us that. Either that, or the stocks would be the price action would be pretty thin, and we don't want to trade that either. If the market allows it and it's a wet market climate, we could do multiple trades at a time. I mean, there are multiple trades happening at a time because different people are trading different things. That's the difference. Everyone's trading other things. They rely on themselves and everybody else. All of it. All of it is based on trading stocks the whole day. Unless someone asks questions. Jay, that's a good question. It allows you to be able to tap into other securities when some may be dry, others may be wet. And what I mean by dry is the market conditions are bad, and then in another security, the market conditions could be better. For instance, a couple days ago, the market was really choppy. We weren't able to get into anything on the equity side. However, some equities that were higher priced were moving, so we were able to take options. Now, we don't trade equities or shares on higher priced stocks. Instead, we move to options because you could take advantage of the leverage and the volatility. Did I miss out on anybody's questions? Oh, sorry. Due to fees, I guess due to fees and other things as well. After trial, I believe it's $47 a month. I'm there from 9 till 4 o'clock. I do take a half hour for lunch though, but I'm talking most of the time. I do live trade as well though. So this is what I do in the chat room. It's either going to be called the setup alert, okay, or it's going to be called the trade alert. If it's a trade alert, I'm taking it live. But you're only going to see about 3 trades a day that I take live. Well, I don't want to keep the chat room boring. So what I do, like I said, I'm keeping it education low, and thank you for the great questions. So since it's more education based, I call out setups regardless if we're taking them or not, so you guys could get acclimated to the formations, okay? And then from there, you could ask, how come you're not taking it? And then I would guide you through the process of why I'm not taking it. That's why I'm so different from other chat rooms. You know, and I don't blame you, Lo, for saying BS, but I've been through a lot of different businesses, trading firms, and stuff of that nature. I know what a trader needs to be successful. I'm not here to sell you a dream, that's for sure. I don't trade off of a laptop. I have 5 screens up. I started about 8 years ago, and I started off with $10,000. I lost all of it in 6 months. I stopped it, and then I became a risk manager, and I started to see things differently by looking at the other end of the stick, you know. I started to really see what was needed, and I began to work with someone who's a programmer, and I built algorithms. Simple algorithms that were off ETFs, FAS, FAS, TNA, TZA, GLD, SLV. All right, and SPY. Obviously, FAS, TNA, TZA, GILD, SLV, they do not work anymore. They were sucked out of liquidity, and they do not move as they used to. And they were based off momentum and parabolic SARs. For trading charts, honestly, you can find a lot of things online for free about trading charts. One of my favorites is I forgot his name, Steve something, and it's the Japanese candlesticks. That one has, yeah, Steve Nyson. Yeah, Nyson. And one that you should really do is dark pools. A great story about how dark pools started in Staten Island will really bring to light a lot about dark pools and algorithms. Very interesting read, entertaining. So, Lo, what do you mean by what do you discriminate? Sorry for missing out on your question. John, I don't care which way this thing goes. I'm waiting for Greece. I just want volatility to come back into the market because it's really exhausting watching charts and only taking about 2-3 trades for the day. Mostly day trade in the chat room. Okay, so that's a great question, Lo. Just because we have setups, and let me explain, Lo, this is great, thank you. Level 1 and level 2 are very different from each other. A lot of people, level 1 is all about teaching consistency, okay? It's not going to teach you anything about our setups and our meat and potatoes. Level 2 teaches you our setups and the meat and potatoes. However, someone who only learns our setups will not be consistent enough to be able to trade profitably. And the reason being is because he hasn't learned level 1, which teaches him how to discriminate, okay? So just because you have the answer to our setups and you have the checklist to our setups doesn't mean you're going to be successful, because not every setup is going to work out. It's just not how it works, okay? That's not how the market works. You have to know if the market conditions, the overall market conditions, are in your favor. If they're in your favor at that time, then you could take that trade, okay? If it's not in your favor, then you want to stay away from it because it may fake you out. And I'll give you an example. Guild today, okay, SPY was going down at the last 2 hours, and it was forming a trend continuation, which we call an inverse pop, to go down. And as SPY was crashing down already, Guild was forming the same thing, so it was correlated to the overall market, but it was taking longer to form and break down. So I didn't take the trade. Why? Because it wasn't reacting, highly reactive to the overall market. It was lagging. So by the time the SPY breaks down and goes down and Guild now catches up, I'm going to be getting in Guild short, and then SPY is going to revert back, fade all the way back up, and then you get stuck. Guild, yes, G-I-L-D. It's an equity we trade. Check it out. Does that make sense, Lo? I like your skepticism, though. I always love that. Good to be skeptical. Okay. You know what? You know what, guys? There's still a lot of people here. No one's leaving. Let me show you. Okay? Let me show you here. You guys see the screen? Hold on, let me pull it up. Blah, 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 blah. Okay, here you go. So, let's check out Guild. At sometimes Lo it does, and sometimes it doesn't. That's how we teach you. You see, what we teach you is that most people, they focus on the shorter time frames and not on the whole stock, okay? There's so much underneath the surface that could tell you what's really going on, all right? Now, sometimes the market will be in your, this is what we call it. We call it headwinds, okay? Think of it as a scale. The more things you have going in your direction, the more fluid it's going to move in your direction. Would everyone agree on that? The less things going against your direction, the more fluid it's going to move, right? It's like tipping a scale. You have 20 things that are moving in your direction, proving you right. You have 2 things that are proving you wrong, okay? That's very little compared to what's proving you right. So the less headwinds you have going against you, the greater the probability the direction is going to move in your direction. So let's look at guild and see if I could find it. Was it guild or was it something else? Maybe it wasn't guild. I wish I had my other chat room open. I'd be able to show you, but I can show you their past trades. That's fine. Let me show you some past trades. That's another good reason to Alright, so let's look for a good one. Okay, so here we see the 1 minute, right? Everyone following? So right now, let me look for a better one. I need a clean one so you guys don't have anything to really go against. Let me give you a clean one and then a dirty one. Alright, we could use this. So, here's target. Yes, we do follow trends. Absolutely, John. Very important to follow trends. So here's the 1 minute, 5 minute, 15 minute, and the 60 minute on target, right? Now the white line is my entry, okay? Now at the same time that target is forming a flattening period, okay? Before it continues to go higher, which is a trend continuation, what is SPY doing, guys? Can anyone tell me? What is SPY doing at the same time as target when I'm getting in? Not just that, it's not just bullish, it's not just going up. It's forming the same setup, okay? It's breaking out. So not only do I have target giving me a setup, I also have the overall market following with me. And it's great to have the overall market behind my back, right? I got the whole posse behind me while you got nothing, all right? And with this, I'm able to know that I'll be able to get some fluidness out of the market. Now, sometimes the stock won't react as well as the SPY, and sometimes the stock will react greater than the SPY. All right, it all depends on the stock's conditions for that day. All right, and it was still pretty tight. If you look at the Bollinger Bands, they're pretty tight still. All right, and we're already above the upper Bollinger Band at that moment, so we should definitely see some coil back down and some resistance. So you can't expect much low at the same time. So for someone who thinks he could get a lot out of this trade is wrong, because by looking deeper into the stock, into the overall market, I'm going to know that there's going to be a coil down somewhere at this moment because it's touching the 15-minute upper Bollinger Band. All right, all this comes into play. Now, let's say you saw the same setup, okay, low, but SPY wasn't forming this. Instead, it was going down. Do you think it would react the same way, low? Or would this? Probably not, right? Because here's, I'm going to give you one more freebie. Now, every stock has a correlation of 1 to its overall market, okay? 60% of the stock's correlation is based on the overall market, okay? It's based on the overall market correlation. 40% of the stock's correlation is based on the non-systemic risk, which is based on the industry itself, okay? And that 40%, okay, is where most of your opportunities lie. So not only is it important to be correlating with the SPY, but it's also important that the stock itself and the industry has some sort of catalyst action. So ultimately, you do have a headwind coming down while target is going up. It's definitely going to cause target to not move as much. You could Caro, but Apple does also have a majority on the S&P as well, I believe. But yes, if you want, you could switch. Absolutely, to match its index. What's up, John? You got a question? Great questions, guys. See if I can find another one. Look at this one. And this is with SPY being tight, right? Look at the hourly on SPY. You could barely trade anything in that market, all right? Here's a nice one. Look at this, guys. Consolidation on the Bollinger Bands to compression. Now, what do Bollinger Bands usually do? After compression, what are they going to do, guys? It's like a living, breathing animal. After compression on the Bollinger Bands comes expansion, okay? And as you can see, we have the inverse pup setup. We have the mini inverse pup setup on the 5. Same mini inverse pup setup on the 5 on Facebook. Inverse pup on the 1 for a huge downturn, all right? Uh, 20 and 2. You're welcome. No, these are trades that we're taking. So there's some losers here also, right? Here's one, right? I get in short, right? Because SPY's breaking down, but what happens? It goes out. Not all are winners, but it's enough to know how to be able to determine which ones are going to be good and which ones aren't going to be good. And that's why most of our traders have a great consistency, okay? Most people think you could only get 50% consistency. Ask our students and traders. They have 65% consistency, 60% consistency, 75%, some have 80%, depending on the time frame they're looking at. It's a good time. All right, guys, so any other questions, or we're good to go? Yes. We're not looking for a 1 minute break. We're looking for multiple instantaneous breakouts, simultaneous breakouts that have to happen at the same time. And that's all I'm going to give you. There's a lot more to it. Hell yeah, it makes sense, Lo. I wouldn't preach it if it wasn't. Duran Yoetz. Exactly. And that's the other thing. Look at our low. We have previous webinars. You could go on our website. And I have one that shows you how to look for bigger impending moves. So people who are looking at the 1 minute and 5 minute, they get out. And then it breaks out again, even higher. And they go, oh, man, how did I not see that move? How could I see that move? If they looked at the 15 and 60 minute, it may have provided something we call a foreshadowing effect for a bigger move. Okay? And that's one of the 5 laws of the markets that we teach. It's called laws of foreshadowing, which also follows laws of linearity, laws of transparency. You guys have no idea how much our education has. Laws of reciprocity, which is pretty prosody. Sorry about my English. Laws of reciprocity, laws of convergence. And what am I missing? And laws of foreshadowing. All right, those are the 5 laws that we have that are very, very important in consistency, and to be able to take a trade from the 1 minute all the way to the 60 minute. Okay? Hope you guys enjoyed. Thank you so much for your feedback, for your questions, for not holding back. I love that. And I hope to see you guys in my upcoming webinars. It'd be great to have you guys as a consistent base of people. Hope you guys enjoyed. If you guys can, leave a comment by our Facebook that shows the webinar and leave a review of how it was. You got it, buddy. See you in the chat room. Nice. See some of you in the chat room. Bye, guys.